dance floor. As the music dies, there's something in your eyes. Costume light, a silver screen, and only it's still goodbye. I'm never gonna dance again. My guilty feet have got no rhythm. No, it's easy to pretend, and no, you're not a fool. Should've known better than to cheat a friend, the wasteless chance that I've been given. So I'm never gonna dance again the way I danced with you. Ooh, ooh. Time can never mend the careless whisper of a good friend to the heart and mind. Ignorance is kind. There's no comfort in the truth. Pain is wrong.
Hello and welcome to the Closing Beat, everybody. Happy Tuesday to you. How you doing out there? Enjoyed a little song there at the beginning. That was a little AI Frank Sinatra there, you know, singing Careless Whisper. Hope you enjoy that. Just trying something different there. That was the world of AI, what it can do. You know, you could use it for generative stuff and like to try to get work done. And we're like, hey man, make Frank Sinatra sing Careless Whisper. That's what happened today. Hey, friendly warning. We are financial advisors here. I'm gonna give you best financial advice right this very second. You will never hear better financial advice from anybody ever again. The Powerball is at $1 billion. Don't even bother playing because we're gonna win it. That's your advice, right? You might as well not even play. The Jazz team is gonna take home the Powerball. And so weekly, what I do is we have a weekly meeting and we do this thing called Player of the Week. Whoever has like the kind of best performance, something unique that's happened, I give them $100 cash. And this week we decided, all right, that's going into a pot. Nobody's a winner, but we could all be a winner. You know what I mean? So just saying, if the lights aren't on Wednesday, or what would be Thursday morning, we're gone, man. I'm just kidding. But we are playing and we do plan to win. So get out of our way. All right. We like to talk about the markets here, like to teach you stuff as well. So we are going to dive right into that. Let's take a look at the Dow first. Most interesting index for the day. They win the award. It's breaking out. So you got a breakout day, slightly above average volume, but basically moving outside of this little range here. I'll say that the banks started it. Because banks had earnings. We'll report that here, or we'll talk about that in a little bit. You get JP Morgan and such. And then healthcare and tech really kind of picked up the slack. So if we come on over this way, we take a look at the Dow contributions for today by stock. Biggest contributor was Microsoft. That didn't happen until not quite midday, but 1.2% of all the gains today come from that one there. United Healthcare, obviously it's the highest priced stock, so it's going to have some weight if it has a good day there. Goldman Sachs got American Express, Travelers Insurance, so you can see that initially it was banks and financials, and then Microsoft with their news we'll cover in a second. That helped fuel the rest of it there. You now have, well, let's see actually, where are we standing here? You're now up over 5% year to date, which doesn't sound like much when the NASDAQ's 45%, but nonetheless for the Dow, it's up 5% year to date, and that's going to be 7 days in a row of wins. So pretty impressive rally. That is not a record by any stretch of the imagination, or I would be sharing that with you. If we look at the NASDAQ here, it is, like I mentioned a second ago, sitting at 45% year to date gains. Is that common? I'm going to share this here with you. We're going to come on over. We're going to do this right live as we do this. So I'm using our research tool, jazzwealth.com/research, if you want to participate. Greater than, I'll say a 40% gain well, let's do it this way, actually. Hold on a second. We're going to say in any year, does the NASDAQ gain 40% over a year? So how often do we close the year up 45% or 40% or more? That was quick. There's only 3 times. And interestingly, they are post-chaos. I might point that out there. So over here, we're showing the previous year's returns. Actually, in 2019, yeah, it was a good year. Okay, so coming out of the 2008 financial mess, we lost 41%. Next year, we gained 53%. Where are the biggest gains made in the market? usually. They're made after big, severe drops there, right? So a big drop and a reversal there. Same thing coming out of the dot-com bust there, 49%. For the NASDAQ to finish the year up 40% is somewhat rare. Not overly rare. It does it more than any index, but it is a little bit rare. So I just wanted to kind of point that out. It's not common for the NASDAQ to actually finish that high. So you would expect, hey, we're only through basically halfway through the year there, you'd expect that maybe you see a little bit of a pullback. If we go over to the S&P here, we are closing in on 20%. Almost 20%. So if you look at the S&P, if we close over 20%, that would be 3 of the last 5 years have gained more than 20%. That is really odd there. So that is basically the full FOMO trade kicking in there. Everybody's like, I missed it. I'll just get in and see what happens there. But so far, that's what we've got going there. Now, the day started slow. You know, I don't know if you pay attention to the day there. Started slow. Big tech wasn't playing along. Where can I go back to that here? So starting off today, it was really the financials, right? And then Microsoft news comes out. That helps fuel not only that, but Nvidia as well. So if we go over to the tech space, I just want to point out your biggest contributor today has to be Microsoft. So it makes up 23.5% of the tech sector, 94, almost 1% of the day's gains come from Microsoft. That's going to be this guy right up on here. And if you take a look around, Nvidia is going to be the second. So because they're working together essentially on all of this. Microsoft says, you know what? For $30 a month extra, we will include the AI 365. They call it Copilot. We'll include that in your 365 service. Like the most expensive 365 service you can get is $36 a month for an enterprise level. Standard license is like $12.50, $13.50, somewhere in there. I have a feeling that's going to be received as awfully costly or aggressive or somewhat riding the wave, right? You're willing to pay any price for Nvidia. Microsoft says, we're going to start high and see what people are willing to pay. That is huge for them. They have to charge that, by the way. They spent so much money working with OpenAI that they've got costs in there. They're working with Nvidia on their existing tech that they need. They're going to be building out their own tech, so they don't have to rely on Nvidia, all that great stuff. But for the moment, people are like, hey, everybody loves AI. They're just going to pay it, right? You know you're going to pay it. All right, if we go back on over here to the sectors there, I want to talk about the tech sector because that was your best performer there. That's over 5% in 5 days. I want to try something with that too. So let's look at the tech sector, greater than 5% in 5 days. I don't often do things in like the short term here. We'll do 25 years. Let's see, how often does that happen? All right. 5% in 5 days can happen there. Let's look at the forward performance and see. I'm not interested in the day so much. Let's see what's going on there. Because I have a feeling, not too bad. Yeah, your risk to reward starts changing here in the short term. If in the short term you get excited about these moves that are so quick and you want to buy tech stocks, look what happens. Average return here, you have less than a 50-50 shot of making actually getting a positive return. Over the 1 month there, it's basically flat. Risk to reward starts to come down. Over the next 3 months, the risk to reward goes down just a little bit. And over the next 6, so the 100%, by the way, is when that'll be the day that they started, so that doesn't actually count. But other than that, you have odds, very low odds of higher returns after that. In other words, hey, why don't we wait for a pullback of some kind? I don't know what it's going to be like. I don't know how it's going to look, but you got this blow-off kind of, not quite blow-off top rally just yet, but you got this thing picking up steam and getting faster and faster as it's going uphill. A great physics lessons for you. What goes faster as it goes uphill? In other words, what increases speed as it goes uphill or an imaginary uphill or anything like that? Pretty much just an airplane, right? Like nothing else really does that. So keep in mind you're fighting exhaustion if you decide to buy inside of something like that. All right, moving on. Just zipping through it here today. You got real estate. So real estate actually was one of the weakest today. Let's see where it finished off. When I checked in earlier, it was one of the weakest. Real estate, let's go on in here. Why am I not seeing it? There you go. Okay. So it finished as the weakest for the day, and really it's all because of one stock. We can see that here inside of this. If we say for the day's contributions, which one was the weakest? 12% of REITs are made up of Prologis. And if we just click on that here, ta-da, there it is. Right? The others that compete with them, you maybe had a sympathy decline as well, but Prologis was the weakest today. If we take a look at the charts, actually earnings weren't too bad. If you follow that, started with a gap up and just saw weakness right into that technical area that people like to follow. Moving around the markets here, you got crude oil trying to recover and rally there. A lot of people believe that the bottom is in oil, not energy, but in oil. If you look at bonds there, the break in interest rates continues. It's a little quiet right now, but this rally off of lows, I've never seen more analysis from not just like YouTube, but like from actual financial analysts for Goldman Sachs, JP Morgan, Bank of America, etc. Never seen more people suggest that that's the actual bottom, price-wise. I don't know. I don't follow it that much, but I'm like, wow, that's more than I've ever seen there. And I like to point out that the Russell now moving into the technical area that people like to look at. We talked about the stats and everything on that yesterday. Last thing here would be the dollar. The dollar slowly wiping out all of its pre and through, let's do this, through the pandemic, right? Coming out of it, we had that big rally in the dollar. Well, we've pretty much given up half of that there. The dollar getting weaker and weaker and weaker. Okay, let's move on over to some stocks in the news. You had financials today report. Bank of America, Bank of New York, Morgan Stanley, Synchrony Financial, and Schwab basically all beat. If we look at Bank of America, they said loan loss expectations now down 7%. Total loan loss rates are below pre-pandemic levels. That's really the big concern with banks right now. So the stock trading divisions, the asset management divisions, for the most part, net interest income, all good, right? Equities were really good to them for the majority of these banks here. And so they were pretty positive overall to offset that. And so the focus then turns to, okay, what about losses? Like, what are we doing there? Are people paying their loans back? Morgan Stanley actually beat on earnings because of the U.S. stock trading division there. They said, other than that, we're seeing, this is their words, subdued activity from our clients in the United States. You can look at the rest of them if you'd like. Schwab was in there. Oops, sorry. Schwab says they're going to save over $500 million from the Ameritrade acquisition there, just from cost synergies that they don't have to spend more money on. And that's probably the actual words that they use to sound like corporate America for a second. PNC was the only one to miss, but in a sea of bank stocks that actually beat, not too bad there. The loans made and new deposits both down 2%. So they were the only ones to really say that. If you want to put some bad news out there on a bank stock, that would be your only choice today. Ross Stores says, you know what? Things are going so well. We're going to build 100 new stores across the U.S. this year. Okay. And Chipotle says they're moving overseas. They signed a franchise deal with a company out of Kuwait. The franchise partner was out of Kuwait, but they're going to be building all through the Middle East. Chipotle going overseas there. That's pretty cool. BlackRock back in the news. This time they're trying to make amends here a little bit. If you look back just a little bit, everybody was upset with BlackRock because they said climate change is an investment and we need to something, like we need to invest towards that. And they were saying basically we control almost all the money that's out there. So whether our clients like it or not, we're investing in climate change. And they basically said that diversity needs to be included in the workforce, and we have to force people to do this. We can't just suggest it. So gender bias, all that stuff. The CEO said, we're doing that. And got a little backlash, right? A little bit. Speaking up on the other side there that disagreed. And so what they did today, or it started yesterday, but what was announced today from BlackRock is, what if we put the CEO of Saudi Aramco on our board? Because, you know, that's oil, old-fashioned, drilling for oil, not obviously in the climate change agenda. If we did that, it'd make it look like, you know, we're kind of getting back towards neutral there. And everybody pretty much saw right through that and said, but that's what they're doing. So we'll see. Lockheed Martin down today. This was earnings as well. It was a beat. Their backlog is up 17%. Some issues there in terms of keeping up with that. So we look forward and we say, well, then that means forward earnings obviously are stable, but they're not going to be growing because you're not cranking these things out like you should, maybe it's a good idea. You know what I mean? Maybe we should slow down and just take our time putting these things together. We'll see. Anyways, tonight on Jazz After Dark, we are going to do a full and complete breakdown of the special rebalance in the NASDAQ. And in particular, I want to show more data and details wrapped around why it will likely not be an impact for the big stocks that are getting rebalanced. And I'm going to go through all the mutual fund weightings and stuff. I'll show you how I came to that data. So it occurred to me that yesterday we went over it, and I'm like, I could have given more there. So we're going to do a little bit more of that tonight, Jazz After Dark, if you want to join us there. Yeah. I sold some Russell today, and then right after that is, I like small cap value, man. What a wonderful market we have here. Waiting for a pullback, wanting to buy some other stuff. There you go. Yeah, there's a lot of cash on the sidelines, and tonight, actually, on Jazz After Dark, I'll show you how a lot of mutual funds that are supposed to be correlated to the NASDAQ, they still have a lot of cash on the sidelines. So there's no reason to believe that there's going to be a catastrophic decline, barring, like major things, wars and terrorist attacks and stuff like that. But a pullback is, we'll work on that there. Missy says, hot Tuesday in California. I'll bet you we could beat it here in Florida. It rained this morning, and then the sun came out, and it was like, so it's like that hot, sticky nonsense going on out there. Yeah, but I hope your weather is better than ours, huh? We got it rough out here. I sold a cover call on Plantair today, set to expire. It's at $22 next week. Looks like you're in good shape. I don't think you're going to be seeing earnings in there. Maybe very, very close, actually. But, pendulum. Yeah, I'm not going to compete with Arizona. I won't even compete with Texas. You all got a different type of heat out there. I'll take our, because see, here, it's so hot that you start sweating and you almost cool off, Out there, the second you sweat, it's gone too. So I'll give you that. You win. You guys win out there. No problem there. I love it. Yeah, I'm not dealing with that. I think I'm getting to that age now. I'm going to be, they call them a halfback. You know what a halfback is, Cody? Can I hit you? Will we see your expression? There it is. Do you know what a halfback is? This doesn't apply to me, but other people are halfbacks.
No.
And it's not negative. It's a nice thing.
Oh, no.
Yeah, so you don't have to worry.
I
So
was worried.
we have a lot of New Yorkers that have moved to Florida, right? I mean, they're,
okay.
well, you,
Context.
come on, you haven't seen.
Well, now they're going, then they go back to.
They go halfback.
Yeah, they go halfback.
Yeah, so people that move from up north, they come down to Florida, they go, this sucks. They go about halfway back to North Carolina, and they deal with it. So those are referred to here in Florida as halfbacks. Ta-da, you learned something today. Hey, Dustin, what do you Okay. What do you think of RTX at the money? It's been sticking under 100. I think we'll see under 90. Today's a tell. I'm sorry, you can't see it. Today is a tell. Any stock that could not participate in some way today, and in fact was participating at one point and then gave it all back and then some, why? That's got to concern you. Other than the tech sector early in the morning, most things were trying to do their thing. They were trying to rally today. It was very calm and stable. Nothing here. That lends to your suggestion that maybe it can fall more from here. Yeah, for the moment, I would believe that. And take it a step further. Let's go back. Look at all that. Nothing? We're trending lower when the market's given us just one of the simplest little easygoing rallies it's had here? Okay, that's a little different. Yeah. Thoughts on your SCHD? It's underperformed this year compared to the S&P and tech. So it will. It will not outperform every year. This is a different focus. So when you use ETFs, I find that to be a common question where people say, I bought this ETF and it's just not keeping up. Well, what if that ETF's focus was on dividend-paying stocks? Is it the worst this year? What is the year-to-date? Let's see. No, it's one of the worst areas of the market this year. So it's still negative year-to-date. Consumer staples, which will make up the majority of a dividend-paying ETF. So it's lagging. It should lag the market, theoretically, on a consistent basis. But price returns, not total returns. Your total returns may end up being competitive with the market or even slightly better depending on dividend yields. But anyways, that's a little short lesson on that one there. There you go. Glad to help. Grinding retire there. Yeah. MW says not. Oh, okay. So you guys are helping too. Nice. Thank you. Yeah. What's the prediction for the second half of the year? Well, I've been trying to point out each day just some stats that show like, hey, growth should slow a little bit. You hope for a pullback, and we definitely will have a pullback throughout now through the end of the year. But everything shows that when a market, index, commodity, stock is just too far, too fast, it doesn't have to fall, but it does have to take a break. And everything you can see shows that it is taking a break there. So I would believe that to be the case. Yeah. SCHD is in highest weighting is in industrials. Well, the same problem, right? Industrials, if it's weighted to industrials for the moment, that's going to be behind the market as well, just a little bit. Oh, okay, a little bit more than I thought. Yeah. Yep. Timely all-time highs this year. I would really hate to see all-time highs. Because there's no justification for it other than people just chasing, which means it's a very soft rally. People buying more emotional, or if it's on an institutional level, it's people buying because they have to now. They've sort of missed the boat. They got to get back in, and that results in a lot of hedging. And when you have a lot of hedging, you tend to put a cap on things there. So there you go. Okay. Jazz After Dark tonight. If you'd like to join us, it'll be on YouTube there and available for everybody to see. We'll be talking about the NASDAQ special rebalance that's coming up and all the nitty-gritty details of that so you can sound really, really cool in front of your friends, family, parents, advisor. All right. Enjoy the rest of your day. Thanks for watching, and I will be back tomorrow. See you. At Jazz Wealth, we treat you like family. That was going to be our slogan, but the employees here took it a little too seriously.
You bought what? That wasn't in the plan that I built for you.
Oh, quit crying.
Don't spend one more dollar.
I'm gonna start calling you Sylvester because you sound like a real...
Tú siempre estás llorando como un bebé, llorancito.
I'm not mad. I'm just disappointed. That's how you get your identity stolen.
We decided to go with let our family be your family's advisor.